when we talk about the price of Bitcoin, we have a lot of different factors, but one of the primary factors where you always end up hitting a base, right, is going to be the price of the price to mint a new Bitcoin. So to go over that whole process again, Bitcoin mints new Bitcoin through the mining process. When a block is submitted to the chain, a miner goes out and solves that block. It is rewarded with not only transaction fees that the actual consumers that are trading the Bitcoin are paying, but also with newly minted Bitcoin. This number is cut in half every 4 years, about, give or take, based on what is known as the halving cycle. When this happens, the amount is reduced by 50%, and that obviously increases the cost of production for Bitcoin. This is what you want to be paying attention to, because it is much more indicative of what will happen in a bear market than it is of what will happen in a bull run. Now, a traditional retail investor that comes in and looks at Bitcoin will see that initial pump after the halving that's due to the price increase influenced by the miners of the reduced production of Bitcoin and how much their electricity costs are. And then they'll say, oh, look, Bitcoin's going up. And then they cause this huge euphoria pump to where really Bitcoin was inflated well beyond what it was actually worth or what it actually costs to mint. For example, about $60,000 to $70,000 when the actual price to mint Bitcoin at the time was around $22,000. Now, there are other factors like, of course, difficulty on the network. And depending on the margins that the miners are willing to go into, it could, of course, influence the price of Bitcoin to come lower and lower. And as more large companies get invested into Bitcoin mining, it will shift that. But Bitcoin production cost has dropped to about $13,000, JPMorgan says. Why is this important? That gives us a new bottom for Bitcoin. Because our average price to mint a Bitcoin was around $22,000. Now we are seeing it a lot lower, and that does mean that you have this potential to have selling pressure from the miners all the way down to 13K. Declining production costs could be seen as a negative for Bitcoin prices, the Wall Street Bank said in a report. The cost, and this is not an ASIC miner for Bitcoin, these are GPU miners for Ethereum. Come on, CoinDesk. This is what you do for a living. Get your pictures correct. The cost to produce Bitcoin has fallen about $13,000 from around $20,000 at the start of June as miners battled the bear market and efficiency in mining rises, according to investment bank JPMorgan. The drop in Bitcoin's production cost stems from the decline in electricity use as proxied by the Cambridge Bitcoin Electricity Consumption Index, while the hash rate has been fluctuating in recent months with no clear downtrend. According to JPMorgan strategist led by Nicholas, not going to even try to pronounce that. We'll call him Panny. While improved profitability means there may be less pressure for miners to sell their Bitcoin holdings for liquidity purposes, the drop in production costs could be viewed as a negative for overall Bitcoin price, JPMorgan added in its note to clients. The decline in the production cost might be perceived as negative for the Bitcoin price outlook going forward, to the extent that production cost is perceived by some market participants as the lower bound of Bitcoin's price range in a bear market. And it's interesting to see traditional finance catching on to this. JPMorgan went click and they see it now. They see what is influencing the price of Bitcoin. They say some people see this, but it is true. This is something that happens in a bear market especially, which is the price to mint Bitcoin is really going to be your bottom price, your bottom low. So the new low for Bitcoin right now, as I see it, is going to be around that $13,000 mark. Not financial advice. I do not know if it will actually crash to that. We also have obviously CleanSpark performing some M&A and getting some more rigs online. The more rigs that come online, the higher the difficulty of the network will get, and thereby, of course, increase the cost to produce a Bitcoin, which will fluctuate. This is an ever fluctuating number, but it's something to pay attention to, especially once you start getting into a bull run, because once you start getting into a bull run, right after that halving, you should be paying attention to how much it costs to mint a Bitcoin, because that's going to give you an idea of when you should start DCAing in and out, right? And that is really how that really will help you kind of start to judge the market in general. And that's going to be macro, right? Not micro. We can't ever predict exact dates, times, anything like that, but we can kind of see this macro effect across Bitcoin. And it does bring up an interesting kind of concept here too, because Bitcoin's kind of up over that $20,000 mark, right where we would originally expect it. Like I said, Ethereum, I've always said like this bear market would sit around 1100, Bitcoin would sit around 20K. Now, obviously we're going to be shifting those, but when we talk about the Bitcoin and its hedge against inflation, it's interesting to point out that our CPI was way high at 9%, and Bitcoin hasn't really dipped in relation to that. Now, all the cost basis stuff that's going on, it hasn't really applied yet. There are other things that could drive it down later as far as the rest of the economy goes and so on. And I'm not an economist. I can only really give you guys the information on specifically the halving relation and the mining relation and the power and the cost and all that. That's kind of where my wheelhouse is. Greater economic effects to Bitcoin, though, don't seem to be as impactful as maybe initially reported because of this weird timing between the I guess the beginning of the recession, or whatever we're going to be calling it these days, and the natural halving cycle of Bitcoin, right? They kind of coincided, but I think this would have happened to Bitcoin and we would have been at these levels regardless of the economy, is what my point is. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.